The views and opinions expressed in this podcast do not necessarily reflect the views or positions of Acuma, its board of directors, its management staff, or its members. The podcast discussion presented is conversational in nature and for general information only.
Hello and welcome back to the ONpoint Podcast, a series focused on sharing the stories of people who are making a positive impact in the credit union mortgage industry. I'm your host, Peter Benjamin. Before we get to our episode, just a quick word from our sponsor.
This episode is sponsored by Polygon Research. As the annual HMDA data release approaches, there's no better time to prepare. With their flagship tool, HMDA Vision, Polygon Research shows you where you are outflanking your peers and where you still have work to do. Their superpower is microdata. While others offer summaries, Polygon Research shows you the details. Every loan in every market. Learn more at polygonresearch.com.
Today, I am joined by Julie Bowering, Senior Vice President of Lending with A+ Federal Credit Union. Julie, how are you doing today?
Peter, I'm doing great. Living it up in Austin, Texas.
I know, talk about an upgrade. Like I said earlier, and pre-recording, nothing wrong with Indy, but I mean, Indy to Austin, I mean that's a step up. No offense, but it's a good move.
None taken.
Solid move. But I'm excited for our conversation. I'm always excited for our conversations with our guests, but you're one of my favorite people across the country. So I'm loving the fact that we were able to pull you in. Now you somewhat recently started at A+, and you are trying to build out the mortgage division there. And so I think it's perfect timing for us to have a conversation about that and the timing of everything that's happening in our industry. But before we get to that, as always, got to pull Justin in. Let's get that update on everything happening over at Acuma. Hawk, what's going on? How are you doing today?
I'm good, Peter. How are you?
Living the dream. Thank you for asking.
Oh, always. Come on. We can't start it without us living dreams, right?
I know, right?
Right.
Today I'm actually living my dream, so thank you very much for asking.
Yeah, good. I'm glad to hear it's your dream today.
It's no one else's today.
No one else. They can't take it from you.
That's right.
Over here at Acuma, though, we are 1 month. Actually, we're less than a month. We are less than a month away from our first in-person event. We're going to Pensacola, Florida for our Viewpoint Regional Summit. That's happening April 8th and 9th. And we get to have an exclusive experience and networking reception at the Blue Wahoos minor league baseball game. So that'll be exciting. I know we've talked about it. We can't keep talking about it, but I mean, until we get to see, I don't know what a wahoo is, but I'm assuming it's a dolphin.
It's a fish.
Or a fish. See, I was close. Dolphins are fish, right? Mammals, fish.
I mean,
they swim in water.
They're both. You have the mammal dolphin, but then you have the mahi-mahi that's also called a dolphin.
Okay, see, now you got too technical. Anyways, we'll be doing that.
This is why we do Jeopardy, bro.
And this is why I lose at Jeopardy. So after that, we'll be heading to our focal point workshops, which will be happening in Savannah, Georgia, May 6th and 7th, June 3rd and 4th in Seattle, Washington. If you haven't registered for those, what are you waiting for? There's plenty of time, so don't wait. Those are going to be two very exciting locations. If you got to hear the last episode, we were talking about the culture of these places, and I truly mean that. I'm super excited to see the culture of both of these locations. And then also, pay attention to your emails, because in a very few short weeks, you should get something from us on the Make Your Mark annual conference, which is happening September 21st to the 24th in Denver, Colorado. So that's exciting. And if you can't join us in person, don't worry. We have Fast Track's Inside Track webinar series. We have our ONpoint podcast, which is just amazing because, we got Peter leading it at the helm. He likes that. He's not gonna lie. He's like, yes, he said it. And then we also have all of our networks going on as well. So we have the Young Professional Network, the Marketing Network, the Underwriting Network, and the Volume-Based Network. So be sure to check out the events page on acumen.org for more information.
And the funny thing is that, thinking back, 2 years ago, and just in our virtual team meeting one day, I just came and said, hey, let's do a podcast. And the look on everyone's face saying, what the heck are you talking about? We're not doing a podcast. I'm like, yeah, we're totally going to do it. It's going to be awesome. It's going to be amazing. It's going to be a people piece.
I love that you think that was 2 years ago in a virtual meeting.
Was it? It was like 3 years ago?
It was like 2.5 years ago. It was the first meeting I had with Acuma. I think I had been on board for maybe 48 hours. We walk into a meeting and Peter's like, let's do a podcast. I was like, yeah, okay. And here we are.
See,
72 episodes later.
Time flies when you're having fun.
Oh, always.
That's right. That's right.
We wouldn't trade it in for the world. So
that's
it's
right.
Awesome.
Hey, look at all the awesome people we got to talk to.
I know. And now we get to talk to the awesome Miss Julie.
That's right. Julie Bowering. Speaking of which, let's pull her back in.
Yeah.
All right, Julie. So like I said earlier, you're one of my all-time favorite people in the credit union industry. For several different reasons. I think you're genuinely an extremely kind and giving person. I think that you would honestly go bend over backwards to help anyone in this industry. I've witnessed it. I've experienced it. I think you embody everything that the Acuma community is supposed to be. And I think that's one of the reasons why we want to have you on this podcast, because one of the great things that we tote and we say all the time about our community, and that the Acuma community, is that when you come to our events, it's people share, people want to help, people ask, how can I help? And I think you embody that, right? And yes, for full disclosure, you're on our board. And I'm not just saying that because you're a board member. You were a member, and you and I had a long conversation before you were on our board.
Yep.
And I got to know you before you were on our board, and I think I'm the one who pushed you to become a board member.
Maybe
a little bit. And I think that's why I pushed you to become a board member.
Yeah.
But it's all true, and so I say all this, right? And so because I'm tying it back to, yes, you're this amazing person, this generous person, but you're also this amazing mortgage professional who's led very, very, very successful teams. If I remember correctly, prior to joining A+, you were obviously in the Indy area at Elements, and if I remember correctly, you were like the prior to rates really going crazy and things shifting around. You guys were like the number one purchase originator in like the Indy area, if I remember correctly, right?
Yeah, definitely the top credit union, Peter. I think there's just so much opportunity, for credit unions out there to really become the leader in their market. And by the way, first of all, thank you for the kind words. You are absolutely one of my favorite people as well. Just the work that you and the team do to support the credit union mortgage industry is so incredibly important. Yes, and I recently made a career opportunity path change to A+, an amazing organization. I left an amazing organization, but I'm here in Austin, Texas at A+, and I've been here for about 4 months, and as I'm leading now commercial, consumer, and mortgage and residential lending, one of the things that, we're really focused on is taking the mortgage program here to the next level, right? So when you reached out and wanted to do, this podcast, I was like, oh, I'm always up for that. Not only do I find joy and fulfillment in helping other credit unions achieve success, I sometimes need to rely on our Acuma network, the Curans out there, for some tips and best practices as well. So thank you for having me today.
No, of course. So, before we, kind of get into that, the meat and potatoes of today's conversation, and I think, the importance and the idea of driving growth in today's market and the need for credit unions to kind of lay that groundwork for expansion now more than ever, why it's so important to really double down now. Before we get to that, I kind of did this long preface to this question. So please forgive me for the long preface. The ONpoint Podcast, people piece, people making a positive impact. You're one of those key people that make a positive impact every single day. So the question is, it's always the number one question I ask. Who is Julie Bowering? For those people who don't know you, and I'm sure there's very few people, there might be two people who don't know you that out there. Maybe two. But for those two people, who is Julie Bowering? You can take this personally, you can take this professionally, whatever. It can be a mix, whatever direction you want to take this. If you had to summarize who you were, who would that person be?
That's a great question. And I've actually been asked that question a lot recently as, I'm new here at A+, right? So when I think about who I am, I think it comes down to values, right? So I recently had to share this with the team here and, what do I believe in and what do I stand for and what motivates me, right? Most and foremost, family. So very family oriented. My husband, Dave, and I have a blended family and really take a lot of pride and joy in watching them grow and thrive. And they were all very extremely supportive, honestly, of, this great career opportunity to come to A+ and really make a mark and a difference here in the credit union and for our members and our employees, right? But, I'm a financial services professional. I started in 1995 as a part-time drive-through teller at night in college. So worked my way through college. I have a degree in education, honestly, and I'm at an education credit union. So A+ Federal Credit Union by Foundation is a teacher's credit union here in the Austin area. So, I thought, I'll go teach sometime, right? Graduated. Now I'm really dating myself. 98. Went into the management training program at a regional bank up in the Fort Wayne, Indiana area where I had worked and got placed as a branch manager very quickly, where I was required to be a mortgage loan originator more than 75% of the time in that role as a branch manager. And I was terrified. I was like, I don't know anything about mortgage origination. I shadowed in the mortgage department for a couple of months, but got my love and passion, not only for mortgage lending, but just lending in general, because we're really providing solutions to members and clients, the time I was in a bank, that they want to achieve home ownership, or they need that cash out refinance so desperately to, improve from a financial wellness perspective, right? I remember the first loan I did, I worked hours on calculating debt to income and what we could do to pay off obligations to put that family in a better position. I never forget those things. And I've carried them with me throughout my career. But I tell you, I am ultra committed to the credit union space. I love serving members. I love doing things in the spirit of member experience and employee efficiency. So I talk about that a lot. That's a little bit about who I am. And, I'm an ultra positive person as well. So carry that with me throughout everything that I do.
No, I love that. And thank you so much for walking us through that. All right. So, obviously, today's conversation is really centered around the idea of, really how important it is for credit unions to kind of start laying that groundwork for mortgage. And I don't want to say now more than ever it's important because, it's we've been beating that drum really for the past 3 years now more than ever, right?
Yes.
But if you think about it, let's kind of go back 3 years.
Mm-hmm.
Here we are. I hate the fact that I'm looking at my watch, but it's 2025, right? I know. Seriously, it literally feels January, although it was the longest month ever. It it honestly feels like it was just Christmas yesterday. But 3 years ago, it was 2022, right? We were, at this point in time, February, we still had decent rates, right?
Yes.
And we were still riding that high off the refi boom, right?
Yep.
1 month later, we kind of saw, rates spike up, right? And so we weren't quite ready for that. And so really since March 2022, we've been in this environment where we don't know what's really going on, right?
Mm-hmm.
We haven't adjusted to 6%, 7%, 8% interest rates, right? And so we've been in this environment for 3 years, right?
Yeah.
And so we're still kind of sort of in many ways running around like chickens with our heads cut off. But yet we're finally at that point where maybe our members and consumers in general will probably start settling into the idea that, well, rates aren't going to change.
Mm-hmm.
Maybe we should just go ahead and, get out of this 3% mortgage and buy our next house. Or, okay, well, maybe I should just go buy my first time house, my first home, because rates aren't going to change. Right.
Yep.
So we keep saying this. Here you are, A+, actually being forced to implement the groundwork, lay the groundwork, get GSE approval. So let's walk through this. How are you going about this? How are you going to the board and saying, this is why we need to invest in this? What are you doing at A+ to kind of get this ball moving?
So that's a great question, Peter. First of all, we have an amazing foundation here, and we're poised to really take the mortgage program and elevate it here for our members and for the credit union, honestly. So I think when we're talking today too, yes, I have the opportunity to be in a different environment, a different credit union, and we are definitely focused on providing more solutions and options for our members. But also, if you're a leader out in a credit union and you've been there for a minute, been there for a few years, and you've been kind of plugging away, I hope you find value in the conversation today in the fact that, number one, you need a roadmap, right? Like, what is it that you want to achieve in the next 6 months, 12 months, 2 years, 3 years, right? No matter what the rate environment is, we have an amazing opportunity being at a credit union and having loyal members. There is so much power in that, right? There really is. And I think that's why, for me, like, I've really loved serving in the credit union environment for the last almost 12 years, right? Sometimes I'm like, oh, I wish I'd found credit unions. Like, what was I thinking in the regional bank or larger bank environment, right? But I think it's, what is it going to take to really make sure we have all of the options we need to serve our members when it comes to making sure, we have all the conforming products, right? Are we selling directly to the GSEs? It's not an easy process necessarily to get approved with Fannie, right? Looking at that, though, I feel like I've talked to at least a couple of credit unions a month that have that desire, right? So, given that and the ability to service loans in the future, right? Freeing up the balance sheet to being able to sell directly to Fannie, Freddie, FHLB, retaining the servicing for our members gives us the opportunities to continue to cross-help them with other products and services, as well as build that servicing portfolio for revenue stream for credit unions over time as well, right? I know sometimes we don't talk about things like that, but we want to be able to generate revenue and income to give back and invest in our membership, right?
Oh, absolutely. Yes, we're not for profit, right? But those are the things that keep the lights on, right?
Yes.
And we can't forget about the amazing servicing income that we get, because it does keep the lights on. It also pays our salaries and stuff like that. But yes, you are right. All the extra stuff, all the extra income that we get from servicing goes back to better dividends for our members.
Mm-hmm.
And why not take advantage of that type of servicing income? Because it can be a significant amount of money and help possibly offset the costs to originate a mortgage, which is pushing $11,000.
Yes. Yes. So looking at, obtaining GSE approvals now, and it is possible for a credit union out there to successfully get approved with Fannie, Freddie, FHLB. In the last couple of years, I began working with Federal Home Loan Bank, was able to obtain Freddie Mac approval and Fannie Mae approval when I was at Elements, right? The team was very focused on that. So you just have to make sure, first of all, look at what it takes. And there are some great consultants out there that are cost effective that can help prepare you for that journey, right? So looking at that, looking at correspondent or investor partners out there, right? So one of the things I'm really passionate about too is offering government lending products. FHA, VA, USDA have to, right? It has not been an easy economic environment for many of our members over the last couple of years, right? Life happens. And I'll tell you what, like when I was an originator, I did a ton of FHA and VA lending. And I am a firm believer in we've got to have options and as many options as possible for our members. If you don't have the infrastructure today to actually be able to originate, process, and close a loan in the name of your credit union, there are many great partners out there that offer very competitive interest rates and will do a lot of the heavy lifting until it may be on your roadmap to invest in that infrastructure, right? But there's a lot of power in being able to, offer a lot of those programs that have more flexible down payment terms, debt to income ratio, credit challenges such as, bankruptcy in the past. Our members face it all, and they're looking to us, right, for trusted financial advice. And the more options we can have for them, the better.
It's so, a couple things, right?
Yeah.
One, I'm going to do a shameless plug for Acme because I kind of sort of have to, right? Shameless plug. Members of Acuma get a discount at both GSEs on new seller servicer numbers. That's one shameless plug. So Fannie, Freddie, members get discounts. That's shameless plug. But two, kind of going back to where I was, right? But it's the idea of if you're not going to offer these products, someone else will, right? Mm-hmm. And who would you rather take care of this member? You or the broker down the street? Because let's be honest. I mean, that broker down the street doesn't care about this member, right? And that large bank, whether it starts, whether it has a wagon on its logo or has that little, pinwheel looking thing that's blue, or it has a slogan that has something about a wallet in it. They're not really going to care about the member. But if you really think about it, if you allow that member to go to one of them, they're gone, absolutely gone. So why would you allow that to happen?
Oh, you said it so perfectly. Like, I feel like mic drop, Peter. Walk away. Except we need to keep talking because there's a lot more we want to share, right?
But really,
like, it's so important to be able to retain that member, right? They're already here and they're loyal to us with their deposit products. And there's so much more we can do for them. And again, like Rome wasn't built in a day. So these things take time and they take investment. And, I know a lot of credit unions are facing challenges across the country, interest rate risk, liquidity, looking at those things, right? As a lot of deposits have flown out or have flowed out of the just banking system in general, right? So looking for ways to not have to put as many loans on the balance sheet and freeing them up on the secondary market is a win. In addition, if you are in a place where you do have the opportunity to put some loans on the balance sheet as assets, look for some of those niche programs out there, really evaluating the types of products that you have that you can offer utilizing credit union funds, right? Credit unions take deposits in and loan back out to our members, right? So I would save those precious dollars right now for adjustable rate mortgage products, right? I'll tell you what, like there are some fantastic programs out there. I'm a big believer in the 5-5 arm. I think that is one of the best things that a lot of credit unions have done. That is so much better than some of the other adjustable rate products out there. And credit unions, especially if they have lower cost of funds, can really be aggressive with some really good pricing to give back to the members, as well as, thinking about putting those assets on the balance sheet, right?
Mm-hmm.
But I think, it's really making sure that we're dialed in on what do we actually absolutely need to retain and put on the balance sheet. And let's make sure they're products that are designed to help our members that maybe aren't necessarily able to sell on the secondary.
Right. But you are a seasoned mortgage professional. You're very knowledgeable. Yeah. You also think outside the box and have the ability, when you play sports, you kind of have that full field vision, right?
Yes.
And unfortunately, a lot of credit unions, and I don't want to talk negative about our industry, but unfortunately, a lot of credit unions don't have that ability to see the full field, right?
Sure.
And they only kind of sort of see how the individual play is happening right in front of them.
Mm-hmm.
Case in point, let's go back to, 2020, 2021, and the first quarter of 2022. Mm-hmm. All of those refinances, where were they going? Portfolio.
Oh, yeah.
Right. Yeah. That's why, 2022 and 2023, we had so much liquidity issues.
Yes.
Right.
Mm-hmm.
Laying that groundwork of, you're right, GSE approval, partnering with aggregators, whether, it's, a large IMB who has, the ability to subservice for you or purchase those loans. Listen, there's some IMBs out there who don't care about your member. They really just don't.
Right.
Right.
Mm-hmm.
Or it could be a QSO. Again, doesn't really care about your member. Right. And that member will never know that it's being serviced by a QSO.
Mm-hmm.
But our ability to leverage them still allows you to originate, get those loans off your books, but you're also expanding your product development, your product offerings, right? And so I think that's where we, as an industry, as a credit union industry, need to start looking at that full field, right? And start thinking about how do we really become better mortgage originators and not just sitting on our laurels, viewing mortgage as a necessary evil.
No, I would agree with you. And, just in thinking about our chat today, right, I wrote down 4 things. Number 1, people, right? Investing in our team that is serving our members, right? There's always something changing in our industry when it comes to guidelines, right? Or just like making sure that they are in the best position possible and as knowledgeable as possible, right? With all the things, self-employed income, right? That is something that even over the years, even sometimes the most seasoned mortgage professionals still may struggle with those things, right? We have some great MI companies out there that offer training for free, right? So investing in people, right? Making sure that we're looking at how they're doing their job, right? From a process perspective, what are those things that we can evaluate from an efficiency perspective and maybe, get a little clog out of the pipe, so to speak, when moving a loan through the process. So people, process, kind of the basics. We talked about products and then technology, right? Like, I think sometimes it can be easy to say, oh, we can't make an investment in technology. It's so expensive, right? And sure, sometimes there's an investment there, but when you think about the member, we need to make sure it's a frictionless process, right? When they go to apply. Like, we are competing, Peter, you said we are competing with IMBs and banks, but most of the time, an IMB, let's face it, like they dominate in a lot of ways in market share in general, right? No matter where you're located at. Some heavy hitters out there, they invest in technology, right? So making sure that, first of all, another shameless plug for Acuma, right? But we have some great workshops. We have annual, we have podcasts. Like there's so many ways to stay connected and listen to and hear about all the technology options that are out there today. And just when you think you've got your technology dialed in, by the way, you need to keep evaluating because it's a changing landscape, right? But also connecting with, if you have the opportunity and you're a part of a credit union real estate network, there's so much power in that regional network as well. So I came from Indiana and I was working with a group of amazing people to start a Curran.
They just rolled it out. They just rolled it out.
Oh, I'm so excited. So excited for them. But I'm also now excited to become part of the Texas Curran network. I have a great mortgage leadership team here, and we're going to be getting involved in the Texas Curran, right? So making sure that everyone's tapped into and dialed into those events, not just for hearing about technology and processes, but the networking opportunities to share best practices, right? In the spirit of all of us being successful when it comes to helping our members and growth for the organizations that we serve.
Right. And I agree with you. Technology is key, right? But, my concern with technology is, credit unions go out and get the shiny object, right? And that goes out and hurts them more than not having it. Just because the shiny object is out there and it's the best one, or I'm not going to say it's the best one. I'm going to strike that from the record. And Justin, you don't need to delete that from the recording.
I wasn't going to. Don't worry.
All right, good. But just because it's out there doesn't mean you have to go get it. There's a lot of great technology providers that can do the same exact thing for a more affordable price point. That's probably better suited for your origination size, your team size, and you probably don't need an admin to work it, right?
Right. Yeah.
And I think that's a tough part with credit unions is that we go out there and we go and get the shiny object because everyone else has the shiny object, and we end up shooting ourselves in the foot. And I agree that technology is a huge thing that we need because, the mortgage industry as a whole is 5 steps behind other industries when it comes to adopting technology. If you look at healthcare, we're well behind healthcare or other industries when it comes to adopting technology. But the credit unions are 5 steps behind IMBs.
Yeah.
Right. Let's not hurt ourselves by trying to catch up. Let's do it the right way.
So don't be the alien in the claw machine, right?
Yes, exactly.
That's all I keep thinking of when you're like the shiny object. I'm like, oh, it's the claw.
That is so true, honestly. And sometimes you may be surprised if you go on a journey of evaluating a piece of technology, depending on whether it's a point of sale LOS, you may be surprised to find what's out there. And there could be an opportunity to even save a little bit of money. But I'm also a believer in volume wins. If we, implement a new piece of technology, again, not the shiniest object, not the most expensive, because most expensive doesn't mean best, right? But will that allow us to capture more volume? Will it allow us to not have a higher abandon rate on an application because I just can't get through this piece of the application online, right? So think about too return on investment, right? Even if I increase that pull through 25%, how many more loans would you be able to close for that member and continue to have that loyalty and that relationship with that member without the potential of losing it, right? Yes, IMBs are a big player. So are the banks sometimes too, right? So especially regional banks or community banks. So, we don't want to be at risk of, if we can't fulfill, a loan or provide a solution to a member for a loan. Yeah, we do not. And I know we've said that a couple of times, but we don't want to risk losing a member that's so valued.
I mean, and I agree wholeheartedly, but it's like, I won't provide too much detail on this, but it's like, last year I was traveling and I was visiting some credit unions, and I was attending a local Kieran event, and we were kind of discussing technology, and, a credit union spoke up, and it was a small credit union that had a small mortgage division. It was a three-person division.
Yeah.
Okay. They had 2 loan officers and 1 ops person who processed and underwrote. They went out and got an LOS. That's the biggest LOS that's out there.
Mm-hmm.
That has the market share for all credit unions. And I won't name it.
Sure.
And my first thought was, at your origination and your staff size, why are you getting that LOS? You're only going to start hurting yourself because you're going to focus so much time on managing that LOS.
Mm-hmm.
You're going to start losing members. You're going to start losing volume. Those loan officers are going to leave because you can't administer that system anymore. Your cost per loan is going to go up. Why would you do this to yourself?
Yeah.
But maybe it was a long game. Maybe it was a ploy to recruit. I don't know. And I don't know why I share that story, but I think it's a lesson learned. But
yes,
but I also tie it back to, and yes, we are competing with community banks. Yes, we are competing with IMBs. But I think we need to do it in a manner where we need to focus on what's right for our members. And what's right for our members is a system that's going to allow us to maintain that relationship with them. And a system like that one, which we all know which one it is, without naming names.
Me.
and in that instance, is not going to do it.
Yeah.
Right?
Yeah.
And
yeah,
we need to stay focused on the task at hand, and that's just a maintaining our members.
Absolutely. And I think about, in everything that I do and decisions I make, I'm like, I don't make those decisions lightly. And I always think about the fact that when you make an investment in technology or something, like, it's our members' money. So it doesn't always have to be the most expensive or like the shiniest object, like we talked about. And then again, return, like, what do we hope to gain out of it? And then, making sure it doesn't take so much work that also we start impacting employee experience and efficiency as well.
Okay. Well, Julie, we need to start transitioning, but before we do, any final thoughts? Again, the idea behind this conversation was, again, now more than ever, 2025, 2026, we continue to say this, years of the credit union, we've been slowly capturing back market share away from the banks, so back from the IMBs. How can we continue to do this? How can we continue to lay this groundwork? Any final thoughts?
Yeah, so that is a great question. It's something I think about a lot and have over the last couple of years. And I know several of my peers across the country have done the same thing. It's just constant evaluation right now of what we can do to be the provider of loan solutions that our members need, right? So while we've talked a lot today about regular traditional mortgage products, I think a lot about home equity, right? The last couple of years, there's been trillions of dollars. I've heard it at Acuma workshops, right? We've had speakers talk about the fact that across the country, there's trillions of dollars in untapped equity out there, right? So we can't forget that, like, right now too, while we are working on our roadmap and making the investments in people, process, products and technology, also we've got some very viable solutions right now that, sure, IMBs, they can partner with a credit union or a community bank, or Freddie offers some seconds and things like that, right, to take advantage of. But wow, credit unions really have some amazing opportunity when it comes to home equity products and helping our members right now from a financial wellness perspective, because that also creates a refinance pipeline of the future. But I would also say, while we're focused on that, purchase, helping people achieve home ownership, helping people get to that dream home, their forever home or whatever, right? Even though we're in the interest rate environment we're in, there's still incredible opportunity out there. And I'll share this personal story with you. My bonus daughter, Peyton, graduated from college last year. Thanksgiving, tells her dad she has a surprise for us, right? I'm like, new car, new boyfriend, I don't know. I was going through the gamut, right? Well, she drove up in her old car. That's not it. She was like, hey, I bought a house. We were like, what? What do you mean you bought a house? And I was like, why didn't you talk to me first? She was like, Julie, I wanted to do it on my own. She was like, but I need help with my interest rate. But Julie, I went to credit union. She goes, I knew enough to go to the credit union where I've always banked at, right? And my realtor referred me to the credit union as well. She goes, but I wanted to do it on my own. And she goes, honestly, I was throwing money away in rent the last couple of years. And she was like, my payment is actually just a little bit less than rent, right? A lot of our members, those first-time home buyer potential opportunities, right? Like they need our help with that. So when I think about that and the opportunity we have, like just continue to evaluate where you're at, where you want to be, and what it's going to take to get there, but never lose sight of the fact that we're here to serve our members. And there's those Peyton Bowerings out there, right? That are ready to buy, have that 5% down payment, just need help to figure out the path. But proud of her that she did it on her own. And then she got an amazing interest rate because she went to her credit union.
That's right. I love that you called her bonus daughter.
I love that you put banked in air quotes because we need to find out how to become. We need to figure out a way that people can go and say, "Oh, I credit unioned at my credit union." It's like it's the same thing for Google and search, right? I Googled it. No, you searched it. You used Google to do it, right? Like, it's the same thing. We got to get people on board with I credit unioned. Let's see if we can make that a thing.
Justin, you are so right. I think about there's a highway going north of Indianapolis up towards the South Bend area that I used to travel a lot, right? There was this big billboard promoting a credit union in Kokomo. It's like bank is a 4-letter word, right? Come to our credit union. And I know I do cringe or air quote when I say bank, but yes, we need a better term for that. But until there is, we'll continue to air quote that, I guess.
There you go.
Yeah.
I mean, we've already coined memorized. So I mean, we might as well
do credit union.
Yeah,
credit union. I credit union there.
Memorize. We make someone a member.
Yes.
That's right. All right. Well, all right. Last question before we transition to the second segment.
Okay.
Again, this is just like the first question, which was, who is Julie Bowering?
Mm-hmm.
The last question is the same exact question I ask everybody. And again, it goes back to the idea of this is a people piece. We want to focus on who you are individually. The last question really is, what keeps you going? What motivates you? You're just like everyone else. 1 foot out of bed, start the day. What keeps you driving to be successful?
It's a great question. I was just chatting with our amazing CEO here yesterday at A+, right? About the fact that I'm like, there's so much opportunity in the credit union space. And like with my new opportunity here at A+, again, we have an amazing team here of over 500 employees, 17 branches, right? A very loyal member base. And when I think about, the opportunity to give back to members more and make an impact on employee experience and efficiency here, I couldn't be happier to be in a role serving, in a credit union and even at an executive team level, right? I don't take that responsibility lightly at all. And I am very excited to wake up every day and think about what can I do today to make a difference in the lives of our members and our employees.
Love it. Absolutely love it. Okay. Thank you very much. Well, Julie, it's now time to transition to the second segment of our podcast. And again, this is where we sometimes do Jeopardy, trivia, but today we're going to do, the most requested segment of dad jokes. And, prior to the recording, I asked you to come prepared with 2 to 3 dad jokes, and you were kind enough to come prepared with 3 dad jokes. And I love the fact that you are an overachiever and came prepared with 3. No one ever comes prepared with 3 anymore. Everyone always comes prepared with 2 because they were like, I'm not going to do 3. But you came prepared with 3, so we're going to do 3. So the way it's going to work, Julie, you're going to do 3. Justin's going to do 3. All right. And I'll do 3, and then we'll wrap up. Sound good?
Okay. Perfect.
Go for it.
So with my relocation, Indiana born and raised, to Austin in the last couple of months, I was like, I have to find a dad joke on Austin, right? What's a good one? So here's my first one. Why did the Austinite bring a ladder to the bar?
Why?
They heard drinks were on the house. As you know, Austin has a great adult beverage scene, restaurants, all the things. So I thought, okay, of course, that's one of the first things that I find, right?
That was good. That was good.
Okay. Then I tried to find some on housing, mortgage, along those lines, right? Why did the gardener take out a mortgage?
Why?
Because he wanted to plant his roots. Can you hear me?
Don't worry. We'll have the sound effect.
Too bad they can't see me. My air drumsticks.
Your air.
Yes. Or whatever those are. Yes. Okay, last one. I'm sure Dustin, Peter, yours will be better, but last
No.
No, these are great.
No, I'm gonna fail this time.
Nah. I've listened to your podcast, with some great dad jokes, both of you. But I found this one on a realtor site. How do you warm up a room after it's been painted?
How?
Give it a second coat. That's funny. I hope so.
I had to think about it for a second. I was like, oh yeah, that's good.
The sad truth is I went very literal and I was thinking of a heater. How do you warm up a heater? And I was like, I have no idea.
That's good. All right. Hawk. Go for it.
All right. What did the bison say to his son when he left the ranch?
What?
Bison.
I knew that one.
It sounded familiar to my. Did you pick a Texas theme here?
No, but I had to pick one that was gonna annoy Peter just a little bit, and I felt like that was the one that was gonna do it.
Okay.
It did annoy you a little, right?
Did.
So, yeah, Peter loves dad jokes, and so, what's the best way to save your dad jokes?
How?
In a database. All right, last one. What do you call a sheep who can sing and dance?
What?
Lady Baba.
All right, I'll wrap up.
My first one was the best.
It was good. What do you call an old snowman?
Water.
A glass of water. There you go. Thanks for ruining my joke. All right,
I was going there.
All right, good one. A glass of water. I just found out the other day that my new electric toothbrush is not waterproof. I was shocked.
That's a good one.
All right, last one. A lot of women complain that their husbands never listen to them. I am proud to say I've never heard my wife say that.
Boom, shoot. I'm gonna take that one home to my husband.
He'll agree.
Oh yeah.
I think we'll all agree with our statement to our wives.
That's right. Well, that wraps up this episode's dad joke. Julie, thank you so much for taking time out of your busy schedule to sit down with us. Really do appreciate everything you do for the credit union movement, but also our members and Acuma. Really enjoyed our conversation. Thank you.
Thank you. Honored to be here. Had a lot of fun as always. Appreciate the work you all do to support us out here in the credit union mortgage space.
Awesome. Thank you. Justin, thank you.
Of course, it was my pleasure.
And to close out, thank you again to Polygon Research for sponsoring today's episode. And to all of you, we know your time is valuable. Thank you for tuning in to the latest episode of Acuma's ONpoint Podcast. We hope you enjoyed it. Until next time, be well, my friends.
Thanks for listening. We'll see you next time at the Acuma ONpoint Podcast. If not already, be sure to subscribe and give us a 5-star rating. For more great episodes and information, be sure to visit us online at acuma.org. And to get the latest updates, head over to our LinkedIn page.